Today, if you walk through any city in the United States, whether it's New York, Los Angeles, Texas, or even a small town, one question is on everyone's mind. Why are home prices in the USA still so high? We keep hearing that interest rates have gone up, inflation has crushed household budgets, and buying a home is becoming harder every year for the average person. Logically, home prices should have come down by now, but reality is the exact opposite. The biggest reason prices stay high is simple. America does not have enough homes. After the 2008 financial crisis, builders stopped building, and many never came back. Zoning laws, permits, and local restrictions made building new homes slow and expensive. Then came years of extremely low interest rates. Cheap money flooded the housing market. When mortgages are cheap, people rush to buy. Demand explodes. Now homeowners are locked in. Selling means losing their low-rate mortgage. Investors changed everything. Homes became assets, not just places to live. With cash offers, investors outbid regular families. Building homes is far more expensive than it used to be. Fees, taxes, and regulations raise prices even more. Millions moved from expensive states to cheaper ones, driving prices up everywhere. Places that were once affordable are not anymore. For many Americans, a home is their biggest investment. That's why many homeowners oppose new construction. So why didn't prices fall when interest rates went up? Because higher rates slowed buyers, not sellers. The market froze. At the same time, rents kept rising across the country. For many people, buying still feels better than endless rent. Housing reacts slowly. Changes take years to show results. Only more supply can truly bring prices down. High prices are not an accident. They are the result of years of decisions. And that's the real reason home prices in the USA are still so high.
Once, in a city that floated just above the whispering woods, the clouds held secrets waiting to be discovered. If you enjoyed this video, please give it a thumbs up and make sure to subscribe. Click the bell icon for notifications so you don't miss our next video.
Today, if you walk through any city in the United States, whether it's New York, Los Angeles, Texas, or even a small town, one question is on everyone's mind. Why are home prices in the USA still so high? We keep hearing that interest rates have gone up, inflation has crushed household budgets, and buying a home is becoming harder every year for the average person. Logically, home prices should have come down by now, but reality is the exact opposite. And the reason is not just one factor, but many layers of causes that must be understood together. First, we need to understand that the American housing market is not just about buying and selling homes. It is a complete financial system connected to banks, government policy, investors, interest rates, population changes, and human psychology. The biggest reason home prices remain stuck at high levels is a severe housing supply shortage. Over the last 10 to 15 years, the United States failed to build the number of homes it actually needed. After the 2008 financial crisis, many construction companies went bankrupt, builders stopped taking risks, and government zoning laws, permits, and local restrictions made new construction even slower. As population kept growing while the number of homes stayed limited, prices were guaranteed to rise. The second major reason is the long era of ultra-low interest rates. After 2020, when COVID hit, the Federal Reserve lowered interest rates close to zero to protect the economy.
This cheap money pushed people toward buying homes. When you can get a 30-year mortgage at 2 or 3%, people think, why wait later when we can buy now? This mindset caused demand to explode. And when demand rises fast while supply is limited, prices shoot up. The problem now is that the people who bought homes during that low interest period are not willing to sell. If they sell today, they would have to buy a new home at current interest rates of 7 or 8%. Because of this, existing homeowners are keeping their homes off the market, which further reduces supply. The third major factor is investors. In the United States, real estate is no longer just a place to live. It has become an investment asset. Large investment funds, private equity firms, and corporate landlords are buying thousands of homes, especially single-family houses, and renting them out. They have cash, they can outbid regular buyers, and they can afford higher prices. As a result, the average American family is pushed out of the market. The fourth reason is the massive increase in construction costs. Lumber, steel, cement, labor, insurance, everything has become more expensive. When it costs more to build a house, builders cannot sell homes cheaply. On top of that, local governments add fees, taxes, and development charges that ultimately get passed on to buyers. The fifth reason is internal migration within the United States. Over the past few years, millions of Americans have moved from expensive states like California and New York to places like Texas, Florida, and Arizona. This migration caused housing demand in these states to rise rapidly, pushing prices up even in areas that were once considered affordable. The sixth reason is the way Americans view home ownership as a store of wealth. For many people, a house is not just shelter, it is their retirement plan. Homeowners often oppose new construction and vote against policies that could lower home prices because they don't want their property values to fall. This mindset has kept supply limited. Now, the big question: why didn't prices fall when interest rates went up? The answer is that higher interest rates slowed demand, but they did not increase supply. Even if buyers step back, prices don't fall when sellers are not willing to sell. Instead, the market freezes. Fewer transactions happen, but prices remain high. On top of that, rents across the United States have risen sharply. Because of this, many people still believe that buying a home, even with a higher monthly payment, is better than paying rising rent forever. This belief continues to support high prices. Finally, it's important to understand that the housing market does not react instantly. It is a slow-moving system. Policy changes today can take years to show real effects. That's why even if rules change now, meaningful price drops will take time. In summary, home prices in the United States remain high because there are not enough homes, investors are powerful, construction has become expensive, and existing homeowners are unwilling to sell. Until the supply problem is seriously addressed, expecting a large and lasting drop in home prices is not realistic. And that is the real reason most people are never told in simple words. Thanks for watching. If you found this video helpful, make sure to subscribe, hit the bell, and check out our next video for more insights on the U.S. housing market.